Hey, how's it going, everyone? Welcome back to the channel. Hope you've had a wonderful holiday weekend or season. Today we're going to be checking out a Tesla. I kind of wanted to do a revisit on Tesla. This was one of probably the first evaluation videos I did back in July 2022, and we'll review that, what my thoughts were on it, price-wise then. But just looking at the 5-year chart, yeah, there's been a lot of drama going on with Tesla lately. We're down to about 113, actually 110. Yeah, from previous high of 400. So we've seen some pretty massive sell-off, and not totally surprised by it because the valuation was so stretched. I'm gonna go into a couple of things that I've been seeing lately. I've been tracking and kind of my thoughts on, I guess, the future growth for Tesla. Especially back in the 300 area, it was set up for probably like 50% growth year over year for a long period of time. And if you have been in the Discord, you know that I don't really agree with that. I don't really agree with that type of consistent growth over the next 5 years. I think for their average sale price right now, they pretty much are saturating their markets and their growth is going to be diminished a lot. And the only way to really increase that top line growth over the coming years, once they saturate those markets for their current average sale price of about 54,000, they're going to have to basically cut costs, offer a lower model, and we're going to see a decent amount of margin contraction, which is interesting because right now, we've seen some amazing margin expansion over the last, several years. We've kind of seen margins expand, gross margins go up to about 30 and then back down to about 25, but we've seen net margin expansion fairly consistent, and they're reaching this point where their net margins are pretty much, I think, maxed out right now. So in my opinion, if they do have to lower these average sale price, release a lower cost model to compete with, or to really get into the next tier of buyers that are going to be around that probably like 25K price range, we're going to see massive amounts of margin contraction for Tesla over the next couple of years. Something that not a ton of people have been talking about, at least I haven't seen it, are the US registration and sales numbers for Tesla over the last several months. So let's jump into that right now. All right, so I've been using this website for a month now, something like that. I don't know. But I found it, and I found it very interesting, the data that they provide. There's a paid service that you can pay for, but I'm just using the free service, and we can just kind of see, let's go down to, let's see, what is this? October, September. Let's go to August, and we can kind of see August numbers for Tesla on it's basically comparing the month of August versus the month of in the current year, compared to the month of August in 2021, and we can see Tesla had a growth about 50% for US car sales in August of 2022, and then we go to September, and we can see that Tesla had still decent growth of 40% for year-over-year monthly comparisons. Then we go into October, and we can see that Tesla is starting to contract a little bit, 38%, still very solid. And then we get to November, and this is when it starts really getting interesting. And we had been talking about this previously in the Discord, how November for the monthly year over year contracted all the way down to 17% on growth. And I was speculating that, if this keeps up, the US market could be kind of saturated to the current offerings that Tesla has for the average sales price. And in order for them to maintain any type of growth in the US, especially with a tightening consumer spend environment, that Tesla is going to probably have to lower prices a lot, contract margins, to keep up with like any type of decent top line sales growth. So then we got December released, and I think it released today. At least I saw it first today. In December, we see on a monthly basis, we see the first year over year decline of 4.9% right here. So Tesla, in December of 2022, sold less cars in the US than, according to this data, than December 2021. So we're starting to see actually contraction in Tesla's US sales. And I believe we even saw that in China as well for the months of, I want to say, November and December. And I'll try to pull that article up, but Tesla had been kind of, it looked like losing the battle against BYD in China. So and this was the article that I found interesting, going over Tesla versus BYD in China as far as registrations. And you can see that, let's see, BYD was at 51,000 units and Tesla was at about 9,000 units for the final week, it looks like. But the 3 weeks in December, BYD was about 40,000, 44,000, 50,000, and then 51,000, so pretty steady growth. While Tesla for the first 3 weeks is 11,000, about 13,000, 10,000, and then down to 9,000. So it almost seems like we're seeing this like shift of the consumer towards BYD. And if you go to BYD's website, you'll see that the sales price offerings are much more attractive than Tesla. And most likely this is putting a lot of pressure on Tesla to lower their costs, or lower the offering in China, reduce their sales price. But that's just going to compress margins that we were talking about previously. So there seems to be a little bit of a flattening, if not a downtrend or regression in demand in the US, and then a regression in demand in China, especially when we compare it to BYD. And that's not exactly a good place you want to be in for a company that's priced for a lot of growth. Granted, the price is not as bad now as it was when it was trading at $200-$300, but it's still still priced for a decent amount of growth. So with that, let's jump over to my previous video, a little clip, and we'll just see kind of what I was thinking about the price back then. All right, so keep in mind that this was a pre 3-to-1 split. So we can see Tesla price right there was $815 at the time. This was probably July 22nd when I was kind of doing this initial view and just trying to get my thoughts out on Tesla. Yeah, and based on that, like I'm really looking at Tesla at $200. That's probably where I'm starting to get interested in it. And the range is just so crazy with Tesla. I mean, it's crazy. So $200 at the time would have been about $66 after the 3-to-1 split. So yeah, it's not there yet, but it's definitely made some progress towards that number. Now, if we go into my current valuation, I'm trying to just like revisit this and be like, okay, like what type of data has been, I guess, what type of new data can I take into account for this valuation? And let's go into the new data and kind of my new assumptions. And right now, this is pretty much how, like what I have built out. So previously I was like about 66, I'd be interested. Not too much has changed, honestly. I'm looking right now at, let's see, risk-free rate still at 4.87 to 1.99. We've got dilution going from 4% to 1.38% in the various scenarios. Bottom line growth, I've got 13% to 30%. EBIT yield spread 1.5 to 0.5, net yield spread 1.28 to 0.45, free cash flow yield spread 0.85 to 0.5, with a yield spread average of 0.6 or 6.09 in the bearish scenario to 2.49 in the bullish scenario. So target KGAR is still going to be 20% on this one, and yeah, we got a buy price based on that of about $69 on the base case. So, and that would assume 20% growth. If we look at the base case, extrapolated out over the next 5 years, we see that like the 5-year target in the base case would be about 31 billion of EBIT, 28 billion in net income, or about 22.5 billion in free cash flow. And if we go to their current numbers, current financials, got net income is currently about 5 billion. I think free cash flow is about 5 billion, so right on there. So, pretty much, let me verify that first. Yeah, pretty much a 4x in net income. But like I said, the evaluation is still just, taking into account like a lot of growth. The issue that I'm having right now with Tesla is that it seems like as more players get into the space, it's going to be a race to the bottom. So we're just going to get further and further margin compression. And if they start targeting those lower tiers to increase their top line revenue, we're just going to have further margin compression, and their net margins could drop pretty drastically. So I don't I still think they're positioned really well. Like, there's no doubt in my mind that Tesla's going to be a main or the main player in this space long term. It's just what type of reasonable valuation guy put on them to think about establishing a position. For that, under these different scenarios, we got a bullish buy price, very bullish buy price of 172, bullish buy price of 108, base case 69.86, bearish 46, very bearish 31. So the spreads are still pretty crazy. And with the at least pullback in demand, and it looks like the pricing pressure that they're getting from other competitors recently, I'm much more inclined to stick to kind of the numbers that I've had for a while. I think it's playing out so far, and they're kind of reaching that demand peak of their luxury consumer base. And in order to tap into that next consumer base, we'll probably have to go through that margin compression. And yeah, so that's basically what I got. Hope you guys have had a wonderful holiday season. I'm going to try to get new videos out a little bit more frequently. For all the new subscribers, hey, thanks for subscribing. I know it's, I think I got shouted out on a couple channels, so appreciate it. And yeah, let's make 2023 good. All right, peace.